Hey, good morning, guys. Mike, aka Crypto Jewels here. Just want to do a quick video on the overall 50,000 foot level of the market from a altcoin standpoint, and where I think we are and why I am not scared in the least bit of this being a top, and we are simply in a normal correction in a bullish structure. So first and foremost, get the shit out of the way. I'm not a financial advisor. I'm not a professional for this. I don't get fucking paid for this. If you guys blindly follow something I do, that's on you. And if it doesn't work out and you don't have proper risk management in place, and you don't put stops in, and blah, 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 just do your own research. Use this video as an educational piece, or if anything, just an entertainment piece. So stick around for the entire video. I'm actually going to get into how I determine my entries and my exits, and how I project out on the entire chart and on a live chart of where I would enter, where I would exit, and how I get to those levels. I did a real 50,000 foot basic video yesterday on how I do that, but it wasn't on a live chart. It was just, me drawing lines and showing you fib levels and that sort of thing. So stick with this video. It might get a little long and tedious, but there should be, and there will be, a lot of good things that you guys can take from it in order to continue your journey on learning Elliott Wave and how to become, a little better of a trader. So let's get down to business here. Let me share my screen. All right. So here is the total two market cap. So total two is basically all altcoins minus Bitcoin is what it is. So this is a chart that I like to use in order to get a really good idea of where we are in the market, from a higher level. Are we still bullish? Are we close to, possibly flipping into a bear market? What's our overall structure? So on the 2-day chart, here we go. This was the top. Here, let's zoom out just for 1 second to give you guys a little perspective on how this chart looks. This is the whole entire chart and the history of it. As you can see, this thing has been absolutely crazy explosive. A lot of people made a lot of money, and a lot of people lost a lot of money. So here we are. This was the peak of the 2017 bull run, and then you had your bear market. I view this as an A, B, C here, and then the start of our next bull run and our next impulsive wave, 5-wave structure up started here in December 2018. So this is leg 1, this is leg 2, and again, this is an A, B, C. This happens to correspond with our COVID dump as well. So, if COVID didn't happen, who knows, it might not have gone as deep. They might have, 2 might have ended, as a double bottom, or, whatever. We don't know. It doesn't matter. It didn't happen that way. COVID happened, that dump happened, and that affects the chart moving forward. So, as a lot of you guys know who follow me on Twitter, at this level here, this is where I posted a chart and called the top of 3 almost to perfection here, which is exactly what happened. So hopefully, if you guys follow me on Twitter, some of you guys listened and maybe exited the market up here or somewhere around here, because then we had this vicious, nasty dump that scared the shit out of a lot of people, made a lot of people lose a lot of money. Retail traders or retail investors that didn't understand anything about market psychology, market analysis, they probably got in here thinking that fucking Dogecoin was going to $10 and, we were going straight to the moon and everybody was going to be happy and be able to buy their own islands. Obviously, that's not what happened because markets don't work that way, and it fucked a lot of people. So hopefully, again, you guys didn't get fucked, and you guys listened to what I said, and you took some precautions, maybe put stop losses in, whatever, and sold your positions here, and then reaccumulated or bought back down as we started to reverse again and make our next wave up. So macro 3, macro 4. So that means we are on our macro 5. So we should be on our 5th and final wave of this bull market, meaning that we are going to be faced with a bear market here within the, next, I don't know, 3 months, 4 months, however long it's going to be. I think it's going to go a lot longer than people originally thought, including myself. I thought we would basically top, maybe mid-January at the absolute latest, but I'm thinking now we are going to be moving into January, February, March, maybe even April, which is unheard of in the from a cycle standpoint. If you go look at the history of all the other Bitcoin cycle, but anyways, let me zoom into a lower time frame, get an idea of where we are. All right, so this 4 wave ended up being an A, B, C. Then we had our first micro 1 of our macro 5, 1, 2, 3, 4, 5. And then we had an A, B, C. And then we started our 1, 2, 3, A, B, C, 4, and 5 up to 1. So this is our micro 1 of our macro 5. This is our micro 1 of our micro 3. We'll be on our micro 3 next of our macro 5. Now, if you guys watched my video yesterday, you guys might remember some of this. If not, I'm going to go over it again on a live chart. So how I determine where we're going to go from this point on all the way to the top of the bear market. Time frame wise, ignore it. I'm not looking at time frames. I'm simply looking at total price. So in order to do that, you take your trend-based fib extension tool and you put it at the bottom of where your 1 starts, or where your C is, the bottom of your correction. You bring it to the top of your 1, and then to the bottom of your 2. And from an Elliott wave standpoint, you want your price target should be for your 3rd wave 1618 of your wave 2, which is exactly where that hit. 3 hit 1618 on the friggin' nose to perfection almost. I mean, literally. So you could have exited the market here and then tried to buy back on a correction, whatever. That's completely up to you. If you trade based off of this chart, which again, this is a 50,000 foot view of the entire altcoin market space. So we had our 3, and then we had an A, B, C, and then we have our 5. So let's back test the 5 again here. So now, in order to find your wave 5s, you take your fib retracement tool, the top of 3, which is that B up there, to the bottom of 4, and it hits 1618 on the nose again. That's what I usually target for my exits if I'm riding a 5th wave up, or even if I got in here at the 2 and wanted to hold all the way through this is where after this 3 would have happened, this is where I would have put my sells to get out of the market. And then I would end up buying back on this 2, which I did not do. for the record, I'm not out of the market. I'm in it. I've not got no interest on selling on micro time frames at this point. I'm just taking the coins I've got and I'm riding them. They're my horses, and I'm going to take them until I see that they top out, and then I'll reallocate my funds into a different coin. So I'm not playing these moves. I'm just showing you what you could do or how to analyze the market so you guys can make your own decisions and be educated and not get fucked by the market. All right, so now how to determine where to enter on a 2. So you got your fib retracement tool. You go to from the bottom of 1, since we've got an entire 5-wave structure, which happens to be a micro 1, and then you go to the top, and you're looking for basically 0.5 to 618 levels. Now, depending on how strong the market is, we're bouncing here at 382, and that could be the bottom, depending on how strong it is. I highly doubt it based on the way Bitcoin's looking right now. So my target would be anywhere around here. So I would want to enter the market 0.5 to 618. All right. So let's say that's what happens, and our price ends up, doing something like this. You got an A, B, C. Now you can find your next target by going from the bottom of 1 up to the top of 1, down to, let's assume it goes all the way down to 618, which would be at the bottom of that little square there. And then that takes our 3 roughly up to here, 1618, which I've got a little line up there that I use. It's a yellow line because it's the golden pocket is what I call it. So that's how I mark my 3s, is with a yellow line. Now we can take the fib extension tool off, and we can assume, or we can say, all right, our price is going to make a 5-wave structure up there, creating our micro 3 of our macro 5. And then from there, we should top out, and we should be due for a corrective wave. So how to find our corrective waves? Our corrective wave 4 is by going with the fib retracement tool, the bottom of where our price ended. So it ended here at the bottom of the box, all the way to the top. And this would be where you want to enter the market, 0.5 to 618. Again, as I said here, it certainly could reverse. If we are absolutely bullish as shit, Bitcoin looks fucking phenomenal, everything looks so great at this point, it could retrace down to 382 and just explode again. So this doesn't necessarily mean it has to get down there. It doesn't, but this would be a conservative target to enter back into the market. And then also that kind of correlates really well with, another rule of Elliott wave, which I haven't got into, but wave 4 cannot overlap into wave 1. If it does, this count right here, this micro count becomes invalid, and you got to reanalyze and look at what the fuck's going on and basically do a new count. So if we got down to here, it'd be real close to invalidating it, but it wouldn't actually end up invalidating it. So you'd be totally safe and totally secure and ready to just rock it out from here. And this would be a hell of an entry if that happened. So now how to find our final 5th wave up. So your targets for your final 5th wave, you want to take your fib retracement tool at the top of 3 down to where price is reversed, the very bottom of your wave 4. And then conservatively, I like to put my sells right here at 1618, which would be your fifth wave and your final wave up of your micro 3 of your macro 5. So with that being said, we will assume that we can go higher here. So price would look something like this, something like that. And then there's your 3, macro 3. And then you can do the same thing to find your macro 5. I'm sorry, their micro 3 of your macro 5 waves to complete the entire structure. So let's go ahead and do that. All right, so if this is the 3 wave, and we do get that high, you take your fib retracement tool from the bottom of 2 up to the top of 3. And at this point, I would probably assume that we would be reversing somewhere around here. But of course, it's possible that we reverse where I conservatively put targets, which would be your 0.5618. Let's just say it did get that deep. Then you can take your fib retracement tool again from top of 3 down to bottom of 4. So now this is a 4. Your price action looks something like that. And then your target, conservative target for your 5th wave would be around here. As you can see, I've got it higher originally because I think it's going to go higher than that. But this would be a conservative target to take your profits and walk away. Even if it does continue to go up, you know that we are entering the last leg of the bull run, in my opinion. And even if you exit here and it goes, or you exit here and it goes way up, does another 2x, you can't kick yourself because you took your profits. And what's going to happen is this thing is going to collapse and have a real nasty 2 to 3 year bear run that you will be able to buy all of your favorite altcoins at a steep discount. So hopefully you guys enjoyed this video. Hopefully it didn't get too long. Talk to you guys later. I'm out.